All right, good evening, everyone. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Tonight, we're going to be talking about how to structure a blanket loan, also known as a portfolio loan. Give us just a moment here to go live on all the platforms. Go ahead and drop a comment there in the chat as you tune in. Definitely appreciate it. All right, looks like we're live, so we'll go ahead and get it started here. So I'll take the chat off the screen for now, but go ahead and keep dropping your comments there in the chat. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our sales manager, Jose Gonzalez, and we are a lender that specializes in non-QM loans. And what we do every Tuesday, Wednesday, and Thursday evening at 7 p.m. Eastern on the show is a deep dive into a loan officer training topic. Tonight's topic is how to structure a blanket loan. I'll go ahead and let Jose take it from here and take us through it. So go ahead, Jose.
Good evening, everybody. Thank you for joining us for tonight's training on how to structure a blanket loan, right? Blanket, aka portfolio loan. Now, recommendation to our MLOs out there. This is definitely one of the niches that I would recommend that you concentrate on if you're thinking about multiple income streams on different types of loans. Um, Blanket loans are not that many options out there. Not that many um, MLOs really know what a blanket loan is. You tell them blanket loan, they're not going to know you're talking about a loan for a portfolio of properties. That's what we're talking about when we're talking about a portfolio loan. We're not talking about portfolio in the traditional sense that we're thinking about, like a portfolio loan where the investor or the lender has that loan in their portfolio. Usually that means like a private type loan with their own individual guidelines. In this case, what we mean by portfolio is for a portfolio of properties, multiple properties. So we can do the blanket loan with as little as two properties. So let's get right into it and I can break it down for you. But definitely, I would recommend this is one of the niches to concentrate on because the beautiful thing about originating the portfolio loan, the reason that it's usually originated is because they are lower valued properties that cannot be financed in any other way. And usually those properties will appreciate in value to the point that the investor at some point will want to refinance out of that portfolio of properties into individual loans, usually DSCR, also known as debt service coverage ratio loans, which is a great play. You get them into the portfolio, right? Having them close on this purchase of properties that they would not have been able to close on as individual purchases. And then a year, 2 or 3 down the road, whatever it may be, the investor usually will want to cash out, refinance all of those properties. And the only way they're going to be able to do it is to refinance them out of the portfolio loan, either 1 or 2 properties, or refinance everything out. And that would involve having to have a carve out, which is one of the phrases I'm going to explain now in the presentation. Definitely having a carve out clause in a portfolio loan is critical. Not all portfolio loans have it, but if they do have it, that means that you would be able to individually pull one of the properties out of the portfolio, usually with some additional restrictions, and then maintain the other properties still in the portfolio. If there's no carve out feature, you will not be able to pull those properties out of the portfolio, and you would either have to refinance everything or pay off everything. You can't just do one property. So let's break it down for you. um, Now, what exactly is a blanket loan, right? Also known as, like I was explaining, our portfolio loan. Well, this is where there is some misunderstandings regarding how a blanket loan works. So a blanket loan, also known as a portfolio loan, is a loan encumbering multiple individual properties, each with their own folio number. Now, what does that mean? That means that in a portfolio, each property that is included in a blanket loan is going to be an individual independent property. These properties could be 1 to 4 unit properties, but the main thing to note is that each property is an individual property with its own folio number. So this is not like saying it's a multi-family property that has 10 units, so you're going to do a blanket loan for 10 units. No, the multifamily property is one property that has 10 units and it only has one folio number. So you would finance that property with a regular loan, or let's say a commercial loan, but you're not going to finance it with a blanket loan that is for multiple individually folioed or individually titled properties. So again, it's not a loan for multifamily properties that have multiple units tied to the same folio number. And obviously, it is only for investment properties. Can't mix and mingle. Can't have primary with those investment properties in the portfolio. In a portfolio loan, blanket loan, you're only going to have one monthly payment because there is only one note, right? There's only one promissory note for the loan, and states the principal and interest, states the overall loan amount, and that's it. Only one payment, which is also the attraction. An investor buying 10 or 15 properties may have a bunch of other properties already and may not want to be bogged down with paying 15 individual loan payments every month when they can just pay one loan payments. So what are some of the blanket loan transaction specific details? Now, one thing that I want to make note here is that with these transaction details that I'm showing here are not from one specific blanket loan. I'm mixing up different parameters of the different blanket loan options that we have, so that if you should fall into one of those categories, yeah, we'll be able to do the loan, but they're going to be different, different requirements for each option, because these will all be different options. We have multiple blanket loan options. So there is not one homogeneous guideline for the blanket loan option that we have, because we have multiple blanket loan options, each with their own maximum LTVs, maximum loan amounts. So when I'm telling you here, maximum LTV up to 80% for purchase, that's going to be for our best case LTV option. Because, for example, the option that has a minimum property value as low as $67,000, and that also allows as low as 2 properties in a blanket loan, only goes up to 75% LTV, but also happens to be the option that allows DSCR minimum below 1.0. Actually, it's a no ratio DSCR up to, I believe, a 500,000 loan amount for that blanket loan option. So keep that in mind. So yes, we can go up to 80% LTV for a purchase and up to 75% for a cash out refi. Like I just mentioned, we do have DSCR options below 1.0 available. This blanket loan options are for 1 to 4 unit properties only. You can mix and mingle in the portfolio 1 unit properties and 2 unit properties and 3 unit properties and 4 unit properties, but you can't bring in a 5+ unit property into the portfolio, unfortunately. Minimum property value as low as $67,000, because we do have a minimum loan allocated per property of $50,000. And if you divide 50,000 by 75%, which is the maximum LTV for that option, you get 66,000 and change So I rounded up to 67,000 as the minimum property value, and this particular option that does allow as low as 67,000 will allow us a property count as low as two properties. You're going to have a blanket loan of two properties. Minimum credit score as low as 650 for the 75% LTV option that I just mentioned there, and 720 excuse me, for the 80% LTV option, which is going to have obviously slightly better interest rates even at the 80% LTV. Blanket loans will usually have only one closing cost from the title company, whoever's doing the closing for all the properties. So that's one of the benefits or one of the savings that you get from a blanket loan. But you do usually have to have individual title policies for each property, because remember, they are individual properties. One blanket loan, but multiple properties, each with their own separate phone number, and obviously each with their own title policy. Now, like I was mentioning, yes, savings on the closing cost from title, but be aware that there will be a closing or funding fee, they call it different names, from the lender. And that closing or funding fee will vary depending on the number of properties. So they'll usually put from 1 to 5 properties is a certain dollar amount, from 6 to 10 properties is another dollar amount, and so forth and so on regarding the closing or funding fee. Why is that? Well, because there's multiple properties that they have to review the title work on, and the appraisal, right? So there's more work involved. So they're going to charge that extra fee. So that closing or funding fee will offset some of the savings of not having 15 closing fees, but you're usually going to save with not having 15 closing fee and paying. Let's say you have 10 properties in the portfolio, you may have a funding fee of like $1,200. That's still cheaper than $5,000 if you got 10 closings at a average of $500 settlement fee per closing. That's $5,000. So you still do have a savings there in that respect on the closing fees. Max loan amount is $2 million, but we do have higher loan amounts possible by exception. Usually when they do grant the exception, it's going to mean an LTV reduction and possibly some type of a fee for granting the exception. That's basically like off sheet pricing, off rate sheet pricing. So let's talk about some of the benefits of a blanket loan, because then in the last slide, I'm going to reconcile it and talk about the challenges of a blanket loan. Because there are a lot of, not a lot of, but there are some misconceptions about the blanket loan. I mean, some people are sometimes under the impression that it's going to save you a whole lot of money. And like I was just mentioning, it does save you off of the closing fees. And it does save you time and effort of not having to provide the same documents multiple times because you have multiple loan submissions. So let's break down the benefits so I don't repeat these benefits. But bullet point number 1 is facilitating, and this is the main benefit of a blanket loan. I already touched on this one in the first slide, is facilitating the financing of low valued properties that usually cannot be individually financed. So example, and I've had this example myself with blanket loans that I put together. 10 properties with a $75,000 value can easily be financed as a $562,500 blanket loan at 75% LTV, right? Because we're not meeting the 100,000 threshold per property that would be required for the 80% LTV option, but $75,000 would qualify for the 75% LTV option. So we can do that, but one $75,000 property with a $60,000 loan will be very difficult to finance, right? There aren't really too many options at all for a $60,000 DSCR loan. They're usually going to, it's usually 75,000 is the minimum loan amount for that category. Bullet point. So again, let me just reemphasize the bullet point number one is that's the main goal. I had a borrower call me, and asked, what's the lowest that we can go on a property, right? Loan amount, property value type deal. So before I didn't straight out answer the question. I asked him back another question because I already thinking to myself, okay, there's two reasons why the borrower is going to ask me what's the lowest amount we can go. Either he's actually trying to finance $80,000 or $90,000 purchase, you know, or what, because he may not have known about the blanket loan, and this borrower apparently did not know about the blanket loan, but he was wanting to buy more than one. That's just it. He didn't want to buy just one. He wanted to find out what's the lowest we could go, because apparently he had seen multiple properties in the lower price ranges. So instead of immediately answering him his question, I asked him, well, what is the objective that you're trying to reach? Are you just trying to buy one property of 80 or 90,000, or are you trying to buy multiple properties? What is the budget that you have available for the down payment and closing costs? Right? That's the deciding factor. The funds available for the down payment, closing costs, and reserves is going to determine the maximum loan amount and sales price for the portfolio. So he promptly replied, well, I think he mentioned he had like $400,000, $400,000 or $500,000 to play with. So I'm like, oh, great. With that amount of money, and I reverse engineered the transaction quickly, and I'm like, well, with that amount of money, we can go, I can't remember the exact amount. I told him $1.3 million purchase at a 75% loan to value, and your money should cover more than what you need. So he's like, oh, that's great news. I provided him a quote. He loved it. And I'm going to tell you what, he already had his marbles lined up, because 2-3 days later, I'm getting contracts. He went ahead and put, I think, 7 or 8 properties under contract. Now, all the properties have to be from the same seller, by the way. You can't have a portfolio loan purchase trying to close with multiple sellers, because then that would mean multiple distributions at the closing under one HUD, which would not be possible. It has to be one seller, or there could be multiple sellers of the same properties, but not different properties from different sellers. So in that case, he ended up doing a portfolio loan of like $600,000, and I didn't dismiss the call, thinking, oh, this guy, $75,000. Oh, I don't know. No, I got to the bottom of it, and what he really wanted to do was great, and I helped him reach his objective. So you got to ask those questions. So bullet point number 2, another benefit of the blanket loan I touched on is simplified mortgage paperwork process, as you do not have to submit the same documents multiple times for multiple loans to multiple, possibly even to multiple loan officers, right? So you're getting all confused, having to send, a bunch of documents out, stuff keeps getting lost, you keep getting asked for the same stuff, wasting a lot of time, chasing a lot of papers down. Could be pretty time consuming and frustrating. And again, I touched on this as well, the cost and time savings due to the consolidated paperwork. And I already touched on the fact that there are additional expenses such as funding fees and closing fees based on the number of properties that would eat up some of the savings, like I mentioned. Another benefit, this is one that most people do not realize, that, when you're trying to get financing, there are limits that some of the financing conduits will put on the borrower as to number of properties that they could own that are financed, right? There could be a limit to that. So if you consolidate, for example, let's say you're going to you need to free up some of your individual borrowing capacity. So you could put a bunch of your properties into a portfolio loans that have loans on them right now to free up your loans that way. Or if you already have 10 or 12 properties or whatever, maybe the limit has been reached, you could then do your purchase as a portfolio loan and only have one additional loan and not have the issue there of having too many properties individually financed. And another benefit that most people don't realize is you can access additional equities, because let's say, remember, the portfolio is a pool of properties, and the loan to value is a combined loan to value of all the properties, which means you could have some properties that are at a 40 or 50% LTV, and you could have other properties that are at a 95% LTV, right? But then when you combine the overall portfolio value and the overall loan amount, you could be at 75% LTV or 80%, depending where you need to be for which portfolio loan option, and you're good to go. So most people don't think about that one, right? But this is a really good reason for closing on a blanket loan. So now in my last slide here, we're going to discuss what are the challenges presented by a blanket loan, right? I already touched on the main one, right? This is the one that unless you properly explain it to your borrower, and unless you yourself research this particular feature of the blanket loan and are able to properly consult your borrower, you may have a real big problem if you close on the loan and then the borrower reaches out to you a little bit later and says, hey, you didn't tell me that all my properties were locked up in this one loan, that I couldn't release any of these properties individually. Because remember, these investors are in the business usually of turning properties over for a profit. They're going to hold them, cash them out, eventually sell them. And sometimes somebody makes somebody an offer they can't refuse. They want to sell the property because it's a great offer. They're going to make all this money. And all of a sudden they're like, nope, you can't. We can't partially release release one of the properties individually from the blanket loan. It's all or nothing. So we do have options that allow you to carve out. But for example, the option that I mentioned to you with the lowest credit score option, 650, that also has a DSCR option below 1.0, that option does not have a carve out feature. But the 80% LTV option does have a carve out feature. So again, make sure that you understand what the carve out is, because bullet point number one, the main disadvantage to the blanket loan is that it may be difficult to sell or refinance individual properties without a partial release clause, which is a carve out clause. This is referred to as a carve out. Some blanket loans allow it with restrictions like paying down an additional amount towards the payoff of the property being carved out to, as they say, rebalance the portfolio. So like I recall in some portfolio loan options that we have, they'll say, okay, you owe $100,000 on that property that you're carving out. Fine, you got to pay the $100,000 plus you got to pay an extra 20% carve out fee to rebalance the portfolio. That's not a fee. You're just paying down the balance an extra 20% of that $100,000. So it's not like a fee. They're just going to make you pay a little bit extra off. Now, another big challenge is that note that blanket loans are limited by state. In other words, each state is going to have different regulations on how they treat a blanket loan. So if, for example, you have properties in 3 different states that you're trying to put together into a blanket loan, you're going to need to get 3 different blanket loans, assuming that's what would end up happening, that you'd have enough properties for each loan to have it be a blanket loan. But in essence, whichever, if it's a blanket loan or not a blanket loan, you would need 3 separate loans. You cannot have properties from different states on the same blanket loan. And as I touched on a little bit earlier as well, the properties, if it's a purchase, the properties need to be purchased from the same seller. And again, this has to do with the laws to be able to legally close the file, right? At that closing, they're going to issue the payment to the owner of the properties, right? And it can only be, one entity or multiple owners if it's multiple owners of those properties. But you cannot have, but they have to be the owners of the same properties, right? So 5 properties have to have all the same owner. You cannot have 2 different owners unrelated with multiple different properties in the same portfolio loan closing, because the law would not allow you to make that distribution to different entities with different properties on that same closing. So that would be a big no go. Okay, one other another challenge of the blanket loan is that keep in mind that all of the properties serve as collateral for each other. So an issue with one property could jeopardize the whole portfolio. So like if one property ends up getting a code violation lien or something like that, and that has to be satisfied, that code violation lien goes against the portfolio, and in essence could encumber every property in the portfolio, right? So keep in mind, this is a joint effort here. And last bullet point here to cover regarding challenges of the blanket loan is that if, similar to what I just mentioned about, one property could damage the portfolio. If one of the properties, if you're just trying to close on the loan and one of the properties has a clouded title, then you can't close on the other ones as well. So in essence, the only way to close on that loan would be to remove that one property from the portfolio purchase, right? And then that may mess up the whole transaction, because the seller may say, wait a minute, the whole deal was I'm selling you all 10 of my properties. I don't want to sell you 9 of the properties and have to keep and try to sell one of the properties individually, because it's going to be tough, because that's only a $60,000 or $70,000 property, and they know how difficult it is for those lower valued properties to sell. So keep those challenges in mind. All the properties got to pass inspection of every type to be able to close on the portfolio loan. So like I mentioned, definitely look towards blanket loan as one of the good niches to try to specialize in as a loan originator. And I can guarantee you're going to get a steady stream of business of underserved borrowers who are going to be more than happy to meet you and be a very captive audience.
All right, thank you, Jose. Okay, so let's look at some questions here. So we have a question here. Is this non-QM, so no PMI? Well, yeah, remember anything that's non-qualifying, right, and is going to be non-QM. So Jose, you want to touch on that?
Yeah, I mean, all of these blanket loans are non-QM loans. There is nothing conforming about them. So yeah, definitely never any PMI applicable, even though the maximum LTV for the blanket loan is 80%. So you really wouldn't have PMI applicable due to LTV, but never any PMI applicable on any non-QM loans. Regarding non-warrantable condos being financed, yeah, I mean, there's going to be a questionnaire just like with every other loan, right? And then depending on the loan to value, it's gonna be the determination if it's going to be a full review condo loan or a limited review condo loan, which is usually what you're going to need if you have a non-warrantable condo, because usually what's going to make it non-warrantable is going to be no reserves, high percentage of renters to owner occupants, for example. More than one entity could own a certain percentage of the units. Those are usually the ones that, or litigation. But litigation doesn't get resolved by limited review, though.
All right. I think the other questions were pretty much already answered there after they were asked. So I think we can go ahead and wrap it up then. Great training here today. Remember that we do this at 7 p.m. Eastern time every Tuesday, Wednesday, and Thursday evening, where we go through a new loan officer training topic. So we will see you next week for the next episode of the Loan